Hello, fellow traders. 'Tis I, the Rumpled One. Monday, December the 3rd, the year 2018. Let's talk trading. What does losing mean to you? See, my videos over the past few months have really been focused more on what's going on inside your head versus what's going on your trading platform, because basically it doesn't really matter. We're all looking at the same pairs and we're seeing the price move in the same way, but we interpret things differently. And that's part of what makes trading. Some people think price is going to go up. Some people think price is going to go down based on what they see, what they know, what they think. And it's really difficult to make progress as a trader and in life if you attach meanings to things that attachment debilitates you, that attachment holds you back, that attachment blurs your thinking as opposed to makes you think clearer. So what does losing mean to you? I'd like, I really like for you guys to respond, down here in the comments section, um, to this question. Because you see, if losing a trade is devastating to you, well, one, if it's devastating, maybe your position size is too big. But if it just makes you upset, enraged, just takes you right out of your game, um, then I would suggest you give losing a different meaning. When you truly understand trading and you really realize all the work and preparation you do up until the point you click the mouse to enter the trade means nothing once you click the mouse, has no effect on the outcome at all. Once you can internalize that, then losing doesn't really mean anything. It just means you lost. It means that trade didn't pay. That's all it means. I mean, if you're a quarterback and you throw an interception and throwing an interception, takes you out of your game, then I mean, you're no good to the team. Just like if you're a batter and you strike out and that just blows you for the rest of the game. You strike out in the first inning and you're no good for the rest of the game, then you're letting your team down. In other words, these isolated incidents, you know, a losing trade doesn't mean anything except what meaning you give to it. That's all there is to it. And so it doesn't mean your system's wrong or your system sucks or whoever taught you sucks, because that's usually what happens. Doesn't mean the indicator sucks. It just means that trade loss. That's all. And if you try to analyze why it lost, you could come up with 1,000,001 different reasons. None of them could possibly be valid. I mean, it's just that simple. I mean, you enter a trade, then a news event happens. You didn't know that news event was going to happen, and so you lost. Big deal. I mean, if you had your position size right, you know, you didn't lose more than you were willing to lose, then who cares? That's just part of it. I mean, you don't go through trading with zero losses. You don't go through, almost any sport or game with zero losses forever. Sooner or later, you're going to lose. Even if for a season you have an undefeated season, how many seasons in a row has any team had more than one undefeated season in a row? I don't know. Maybe I should Google it. But the point being is, it's all about the meaning you put on that loss. So, it's it's check time. You got to look in the mirror. You got to be honest with yourself and say, you know what? I am just putting too much meaning on this loss. Because I mean, if you go to Vegas and you sit down, you put $100 in the machine, or you get $100 worth of chips at the dice crap table, or at the poker table, or at the 21 table, that's what you're basically risking. You say, hey, I'm willing to lose up to $100, and then maybe if you lose the $100, some people might put more money in, and then more money, and they keep losing. What's that mean? Oh, they're just unlucky, right? Or maybe they're just bad players. Point is that so long as you stay within your risk parameter per trade, once again, a loss should mean little to nothing. So let's move on to the charts. Monthly chart here. Okay, we're 3 pips below the monthly open, which was basically still today, first trading day of the month. And you can see here we did cross below and then back above the previous month's midpoint, which is used to be and still is sometimes one of my favorite trades, is that previous candle's midpoint. A lot of action around there. And you can see here we're still within the wick zone, upper wick zone of last week. And it looks like we still have a bunch of gaps that haven't filled, so there might be opportunities there. And we're within the previous daily sessions candle. We haven't even hit the wick zone. And you can see here we've now, I think this is 30 something yesterday or last night when I posted. Now we're up to 60, and we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 pairs with the range high minus low over 100 pips. And looking at the buy zone here. In fact, there was a trader that said, where should I start? Well, which method? He said, it should be rat, wick. I go, no, start with the buy zone. In other words, trade away from the open. Look to trade away. Now, one thing I was thinking about is and I think I still have a chart over here. If you think about why does the buy zone work? It works because of the daily range is usually greater than 20, because you see this is open plus 10, this is open minus 10, so this is 20 pips. So you see right here we've got a daily range of 60. Okay, so you can see here price came outside both sides of the buy zone. That's why it works. Then I was thinking about something, because I was listening to a podcast, some trader, and he mentioned open range, which is usually the first hour candle. So what a lot of traders do is they'll put a horizontal line here, and then they'll put a horizontal line here. In fact, I think I might be able to do that with HL5 as we speak. Let's see, did I put that in here? Show timelines true 0. No, that won't work because that will be on the day. I have to put in another version, but we'll do that another time. I'll work that out. But what I was going to say is if you draw a high here and then the low here, you can see once again, if you can visualize that, you can see price got outside that opening range to the south, and it also got outside the opening range to the north. And so I got to thinking about the opening range, And then it's like, okay, let's look at the frequency distribution of the range. Well, we've got a 20 pip range. So you can see here, chances are we've got like 80% of the time that opening range probably is going to be within the buy zone. And where'd it go? I've got so many charts here to show nowadays. And you can see here that opening range was within the buy zone because we're doing 20. So you see, you actually got a sell signal, or rather a buy signal, but it didn't quite go outside that range. That's just something to take note of. And so what I'm thinking is, how do you use that information? Well, if you know the opening range and you know the buy zone, then you know to get outside the buy zone, it's got to get outside that opening range, right? But you see here, we did have a very interesting opening range that was over the 20 pips, and it actually came out. Just something to note. So I'm going to speed through the rest of the charts here. We are in the upper rat zone, the red rat zone. Look for a short somewhere before 128.94. We're right at the double O. So there's always a lot of price action around that double O. And the pivot, we took out the pivot. You can see here we took out the pivot. Remember, I said yesterday, chances are we're going to take out that pivot, and it happened. Now we're looking to take out these two pivots by the end of the year. Let's just see. And price action, 2-ball at the top, red at the line, 2-ball at the bottom. There was a green at the line right there. It would have been trapped, unfortunately. But then again, you see it moved 20 pips. You might want to rethink that. Jumping in after a 20 pip move, how much more is there? Right here, if you weight it, you can see here, green at the line. There you got your 20, 30, 40 pips. Once again, there's a lot of buying happening. Once again, price at the line, candle color right there at the line, horizontal line cross. Somebody said to me something about wanting to know about the indicators. I've got to change that lime color. That is just not working. Let's go to a darker green, forest green. There we go. We can see it much better now. They were asking me about horizontal lines. I said, that's pretty much it. Just trade horizontal lines. We've got the holo set up. You can see right here. You want to go short at 129.01 with a reversal in the highest open, the upper holo zone. You can see here we had a long trigger at 96 on the inventory reduction bar at the 15 and at 99 here on the H1 with a short if it goes up and back at 129.048. Okay, speeding through one of my favorite screens here. As you can see, still no trade off this screen. On the ticks, you can see what's happening there. And also on the Einstein line, people say, well, you get chopped up if you go there. It's a lot of whipsaw. Well, all you have to do, maybe you just pick a direction going with the daily candle color and you only trade one direction. And as you can see, that would have been profitable here in a Larry Live trade. Once again, you can see how much buying is going on. So, fellow traders, that's it. Remember, It's not what you trade, it's how you trade it. Now get out there and drain the banks.